This is a forecast indicator, and it's only good at one thing: pulling previous price action to predict the future, and it does it really accurately. It took us multiple days and countless hours of backtesting to realize that this tool is twice as accurate as other forecasting indicators. So today, we're going to dive into what this indicator is, how it works, and how you can use it to improve your trading. First, go to TradingView and open up any crypto or stock exchange that you prefer on any time frame. For this example, I will be using my new favorite, XRP USD, on the 15-minute time frame. Then click on indicators and type in MACD based price forecasting tool. Then it's going to be the one by Lux Algo. Now, I know what you might be thinking here.
What is this indicator and how does it even predict the future?
Well, the MACD based price forecasting tool is an indicator that uses historical MACD data to predict future price movements after previous MACD patterns. Now, here is a more in-depth breakdown of this indicator and its usage. What is a MACD? The MACD is a very popular indicator that tracks trend direction and strength by measuring the relationship between two moving average of prices. Now, this indicator is very simple and is only made up of a few components. First, we have this line which represents the zero line on a MACD, and then we have these red and green areas which represent the MACD histogram. It basically mirrors the histogram on the MACD, which, if you didn't know, the histogram visualizes the difference between the MACD line and the signal line, highlighting the strength and momentum of price movement. So if you see these bars start to grow, then you know the strength of the price movement is strong. At this point, you will see the indicator start to generate predictions on where the price could go and present a forecasting area. The forecasting area in the MACD based price forecasting tool is a visual representation of the price range, where the market is likely to move after a MACD signal. It's based on historical price data and calculated using percentiles, creating an upper bound, lower bound, and average range. The upper bound indicates the highest potential price level based on the top percentile settings. The lower bound shows the lowest expected price level determined by the bottom percentile. The average range represents the central tendency, offering a balanced forecast. Now, here's how the indicator works, and for this, we will have both the MACD based price forecasting tool and just a typical MACD indicator on. We have backtested this indicator on multiple settings and realized this indicator works best on default settings, so I recommend leaving this indicator on the default settings. Now, you see how the forecast area right now is orange? That is because the histogram on the MACD is red, and when the histogram changes to green, it produces a new forecasting area on where the price can go. This tool generates its forecast by using the previous price actions when this scenario has happened in the past in the MACD. Now, this indicator is not like the other forecast indicators. It will only make forecasts if the conditions are right, so it will not have a forecast 24/7. As you can see here, the indicator is not giving us a forecast, and this is because price is starting to consolidate and be trapped in this price range. Now, let's move into the strategies we have developed that has made this indicator into one of the top performing indicators we have tried this week. For this, you will need to make sure you have this indicator open and the MACD indicator open as well. We will be closely monitoring the MACD when we enter into a trade based on the forecast area. Okay, now that you have these two indicators open, we are going to wait for a new forecast area to form. I highly don't recommend trading when the price has made progress on the current forecast area. Once you see a new forecast area form, you will want to look at how the MACD is doing. If you see this right here, when the lines keep intertwining with each other and not making moves, do not enter this trade. Again, this is where price starts to consolidate and the market becomes super unpredictable. This indicator does a good job at filtering these out, but we have noticed at times that one or two slips by the indicator from time to time. Now that you decided not to take this trade, you can either wait it out or you could scan through other stocks or cryptos with high volume to find a setup more optimal. As you can see here, I have found a setup that not only gives a wide forecast area in the bullish area, we can also see the lines in the MACD are not consolidated and they are making strong moves. Do not jump into a trade right when it makes a forecast. Always wait for the candle to close to confirm the move. Sometimes, as you can see, this indicator will go back and forth on one candle on where this train is moving, and you want to wait it out. Once you have made sure the price is not moving sideways and that the candle has closed, this is where we will enter into our trade. Here, the market gives a forecast area of a bullish trend, so we will buy 5,000 XRP. We will set our stop loss just below the lower percentile and place our take profit just near the upper percentile. This way, if the price goes down, we will have only lost a few dollars, but if it hits our take profit, then we will have made a few $100s. If we fast forward here, you can see that price did in fact hit our take profit, and we would have profited $500 in a matter of 10 minutes. Now, I'm going to show you the forecast where we would have lost if we would have entered into a trade. As you can see here, the indicator shoots out a forecast and we enter into our trade. We set our stop loss and then our take profit. We sit back and think about the supercar we will own, and boom, price hits our stop loss. If we rewind a little, you will see here on the MACD that the lines were intertwined, meaning price is starting to consolidate here and the market is starting to become unpredictable, even for a computer. This is why you should always make sure the market is actually trending and not moving, or else you ruin your odds to make a bunch of money. Now that you know the strategy, let's get into our results based on days of backtesting just to show you how good this indicator works when you follow this strategy. We used this strategy over 1,000 times within a few days with a 2% risk trade. This strategy ended up having an 83% win rate and netted over $15,000 profit within 2 days span. This strategy goes insane.